Trader's Edge with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. It is terrific Tuesday. I hope you're off to a great start of your day. You absolutely should be. And you know, folks, it is all about taking massive action. I love that true story about Rocky. And it really is all about taking massive action, you know, and in order to become more, in order to experience what you really want, folks, you've got to become more. And it really always boils down to taking massive action. You know, I would say, the futures are off this morning. We're going to get to those. You can always give us a call at 877-927-6648. I say the futures are off. You've got the Dow down about 70-plus points. S&P is off about 8.5. NASDAQ down 13. Nothing but normal breathing patterns. King dollar up 28 ticks. And we're going to go take a look at the markets and anything else that you'd like. You know, you can always give me a call, folks. But I do love that Rocky story because it is all about taking action. You know, oftentimes when you take a look at costs, most times we measure them based on actions that we've taken. Think about it. But if you could go back and you could relive just a couple moments in your life, you know, if you were Charles Dickens or what have you, you could go back, you could maybe go back to your past, you could experience it, and you could have taken some action. Usually, in fact, most of the time, the reason that you didn't take action was because of what? You know it. You've been listening long enough. All because of fear. All because of that false evidence appearing real. You know, fear, the fear of not being loved, it's usually that fear of loss. You were afraid. Each of us, and I'm not saying you, each of us, it's something that each of us have to overcome each and every day. If you trade the markets, you certainly, it's a continuous test of being able to overcome your fears. You know, yet you could go to sleep last night and you could say, you know, if the market were to pull back to here, whatever it is that you're trading, you're ready to buy, and as the market gets back to that area, all of a sudden you have that fear, you know, should you enter the trade? So if you go back and measure, if you can, think about it during the day today, if you will, because I want to be able to change your focus. It is all about what we focus on. And what I want you to focus on is not the cost of the decisions that you've made, but how about the cost of the decisions that you did make? Or how is it that you could have acted? If you could go relive your life just a little bit, make just a couple of changes, is it really about maybe taking some action that you didn't? Because oftentimes when people, you know, think about it like this. Most of you that are listening have actually been in the markets, whether it was in 2007, whether it was 1997, whether it was 1987, whatever it is. Many of you have been in these markets. You've watched them go up and down. Hopefully you've been able to learn how to play them on both sides of the trade, or at least get out of harm's way, you know, when you've been in a confirmed downtrend. And if you haven't, you absolutely should. You know, that's why we want to be able to teach you these patterns that are here. And folks, you're not going to get every trade. You don't need to get every trade. That's not really what it's all about. This is about being able to make money. This is a money game. This is not, or, you know, which is real life. But I like to be able to use that word game, if you will. I guess I also like to use that word, if you will, huh? And I do like to be able to think of this as a game. We're all better at playing games, and if you can realize and you can take yourself maybe a little bit less serious and realize that this is a game. This is not about being right all the time. In fact, because that would be striving for perfection. We don't want to. But what I do want to, let me get back on the subject here. What I want you to think about is go back and take a look at your life, because most folks, you know, I talk to folks and say, you know, they want to start a business, but they're concerned that this is not the right time. Now, when I think about that, and I always like to be able to take a look at things differently, or at least both sides of the trade. That's really what I've trained my brain to do, is take a look at both sides of the trade. What's the bullish side? What is the bearish side? And each moment that I show up and take a look at a chart, it's what is the chart telling me? I don't really care what attitude I brought into it, other than it being an attitude of gratitude. But I'm not really trying to prove a point in the market. It's just what is the market trying to communicate to us? And so when you can come from that area and take a look at both sides of the trade, well, if somebody says, you know, I'm thinking about getting into a business, but I don't know if now is the right time. The question is always, when is now the right time? And usually folks will say, you know, I don't know if I've got enough education, enough resources, enough knowledge, enough, and it always becomes resources. It's all just about becoming resourceful. In fact, I would venture to say this. There's no better time than when you have a down economy to actually get in business. Because if you can get in business, you put together the right business plan, you've got enough capital, you know, so you haven't done it on just a shoestring budget, then what will happen, folks, is you've wiped out most of your competition. Do you really want to get in business at the height of a market, or do you want to get into business as a market is coming back, or as a market is moving down? I venture to say that you want to be able to get in business right when you are asking yourself that question, is now the right time. Because it absolutely is, because there is a huge cost of inaction. If you go back and you take a look at your life, each of us, our largest cost, and we don't spend time thinking about it, is the lack of action. That's why I do say when you do take action, folks, take massive action. So just go back and think about that, and maybe we'll talk about it, maybe even during the Money Master Show. You know, it is Terrific Tuesday. We've got the Money Masters after this show, then Kate Stalter from 11 to 12. From 12 to 1, commercially uninterrupted, we go do the option hour with Victor Jones, go up to Chicago, Ken Shreve out in California, and the Tom O'Brien Show from 4 to 6. So let's go take a look at the action, the massive action inside these markets. You got the Dow futures off about 64 or so, and the ES Mini. That's what I've got up on my screen here, and we do want you to watch us on Tiger TV. Thanks so much for everybody that is listening to us on the radio. We really do appreciate that. You can always catch the archive of this show on Channel 9. And the archive of the Money Master Show is on Channel 10. And I believe that you want to go take a look at last Friday's Money Masters show, because what I did was I gave you a great trading strategy. I mean, it's one that you should go back, you should replay, you should continue to replay, because it is an excellent example of how it is that you want to trade a breakout. You can chase them if you want. We prefer not to chase them. We prefer to wait for the breakout to come back to us. They don't always come back, but when they do come back, they put you on a great reward to risk trade out there. So go take a look at that. I showed you the process, the thinking process, the decision-making process, the 7 steps to being able to trade that breakout. You may be able to even Google that on the internet. I think it is on the YouTube right now. So if you go on the YouTube channel, you might be able to type in the seven steps to trading a breakout, or some type of title similar to that, and you'll know when you see it. But go to the homepage of TFNN.com. That's the easiest way. Go take a look at the archive on Channel 10 of last week. So if we go take a look at the ES Mini, we see what they're doing. You know that we have always discussed making a 100% move of a move. Let's just go ahead and get rid of some of the sacred geometry that we've got out here first, okay, and then we'll come back, we'll put that sacred geometry in just so you can take a look at it. This is the 30-minute chart that we're looking at, and we talk about making a move of a move. Well, folks, what we're talking about is we're talking about being able to make a 100% move of where you have your swing point. Well, in this case here on the ES Mini, it's really at the 5 a.m. time frame. The low there, 1393.50. The swing point after that was 1393.50. So whether it's 5 or 5:30 in the morning, I'm going to use my line tool. Just simply go across the top, the high during that range period, and the low during that range period. And what we're going to see is you got inside that swing point. Once you're inside that swing point, that's a 100% move of a move. You don't have to be exact. You don't have to get all the way down to the bottom. It doesn't mean that's not where we're going to go. But you can see we've made a 100% move of a move. You did that. You came down and you touched that area at 6 a.m. this morning. And what you can see is you just have been trading sideways ever since. And so while it's just hanging out down here, while it has not rejected that area, it looks to me like what it really wants to do is pound out that level, pound out that floor, and move even lower. We'll go take a look at some of the areas where it is likely to head to. But right now what it has done is a move of a move. If you only learn just that one technique just to understand where the markets are going, you could be a chart reader, because that's really what we take a look at, and that happens so often, the majority of the time. So you've made a move of a move. Where is it going to? You know, you take a look at patterns that are out there. There are really, there's a small ABC pattern. Again, this is the 30-minute chart. We can start at the highs that were put in at 2:30 in the afternoon yesterday. Again, we're looking at the futures contract, the high up there at 1408 even Steven. Kind of like even Steven. So if we start at the top there and come down to the low that was put in at 11:30 last evening, it got down to 1401.50, and then it retraced just slightly. Looks like, we'll go measure that, looks like it was even less than a 0.382 retracement. When you do a small retracement, that's really where you want to be able to use that 0.382 number that we use, is to understand the power or conviction behind the move. This case here, the conviction was to the downside. Again, if we go up to that 1408, we come all the way down to the low that was put into 11:30 last night. Gotta love this. How does this happen, folks? The 0.382, 1403.98. And where did it actually get up to last night? It got up to 1404. God. Folks, that's why you want to understand, you want to learn these retracement areas, the sacred geometry, and we don't mean it in a religious sense. We mean because it's sacred to us, because it helps us to trade, and these numbers, they just simply show up time and time again. You want to have these tools in your toolbox, point 382, 618, and point 786. Now, you know, just simply by listening to me, I've taught you some of the really subtle tricks out there that you want to understand. When you take a look at ABC patterns, folks, not only do you want to take a look at the retracement that it's done, because if you only do a 0.382 retracement, that tells me you want to do more than a 1-to-1 A to B equals C to D. In this case, and what that means is 60% of the time, folks, you're going to do a 1-to-1. The other 40% of the time, you're going to do 1 to 1.272, 1 to 1.618. In this case here, what do? Or what does the ES Mini do? It does a 1 to 1.272. Gets a little bit beyond it, almost close to 1.618. You never know exactly where it's going to stop, but it does complete this pattern here and gets into that move of a move. And it gave us now what we also can see here is this move down now. This move down since 11:30 last night has been stronger than the move down from 2:30 in the afternoon yesterday. Time just absolutely flies. I love it. And I hate it, folks. Time just runs by too fast. Love to hear from you. 877-927-6648. You got the Dow futures off about 62. S&P's off 7. And we'll be right back, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. 877-927-6648. And we've got the Dow futures off about 65 points right now. So let's go take a look and see where, if we continue to get some downward pressure in the market. So we'll go take a look at King Dollar, Queen Euro, anything else that you want. But just simply a normal retracement. This is coming off of the lows that are put in down here in the, what time? That's the March 6th lows in the ES Mini, down in that 1339 area, all the way up to the 1408 that we did last night, up until the 1130 time frame. The 0.382 retracement, folks, is right here, 1381. That's this number right here. Now, if you come over to the left and you take a look at it, what you'll see is that's coming right against where we broke out on the 13th of March. And so where it looks like the range that the nice pullback, just a nice little retracement, if we will, and coming back to a breakout area. That's why I want you to go take a look at the video from the TV, from the show that we did on Friday, and you can catch that on Channel 10, and you'll be able to see the breakout, how to trade a breakout. So it looks to me like the range of this move that we should be looking for. Now, we won't know till we see wide range bars, till we see volume and so forth, but it looks like what the ES Mini would like to do is get into that 1381 all the way down to 1377. That is where you had the breakout coming in to the time frame here. Where is that time frame? I think it was around 2 in the afternoon, wasn't it? March 13th, time frame 2:30. I knew it was around 2:30. Let's go to our first caller. Let's go to Lou in New Hampshire. Lou, thanks for calling. Thanks for holding.
Good morning, Steve.
How are you today?
Not bad.
Excellent, excellent. How can I help you? What did you want to take a look at?
DUG.
DUG. Okay. Are you in the trade?
No, I'm not.
You're not. Okay. So let's take a look at the DUG out here, folks. And on the DUG, what we're also going to do is we're going to switch over and we're going to take a look at the XLE and see how the XLE is behaving. So yesterday, let's just take a look at the action from yesterday. And if we take a look at the lows out there, we're looking at February 24th is where we have the swing point, 455,000 shares, did a high of $21 on that swing point. You got into that yesterday, so we got 455. And the volume coming in there was 379. You got down to 2094. You closed above it at 2106. And so you did have a rejection of a swing point on lighter volume. Was that what you were looking at, or?
Yes.
Okay. So now let's go pull up the XLE and take a look and see what the XLE has done, because these don't necessarily trade tick for tick. And you want to be able to trade the DUG or the DIG off of the XLE, folks. That is the Spiders energy sector inside the S&P. If we take a look at the work done on the, and we're going to take a look at the retracement that it did. The retracement that I'm looking at is off of the February 24th. So I think that was a swing point we looked at inside the DUG. Is that correct? Was it February 24th that I said? Mm-hmm. Do you remember, Lou? So
no, I don't.
You don't? Okay. Well, you're not listening, you mean? That's okay. I'm just kidding you. So if we go from the high there, 76.50, 224, down to the low that was put in on March the 6th, looks like yesterday what you did is you got up to about the 0.786 retracement. Yeah, I'm pretty sure I'm going to go take a look and see if that was February 24th. And the reason I want to do that is because, you know, it's part of the reason why is because we have so many people that will go ahead and trade these direction shares. Is DUG? That's not a direction share, is it? I think that's a.
That's a symbol, isn't it?
Well, I know, but I don't know which ETF it is. But if we do take a look at it, because you do trade this off of the XLE, is the February 24th swing point that DUG got into. And when we were taking a look at the XLE did not get up to the February 24th swing point. So, I like to be able to, you really want to be paying attention, Lou, when you are playing either the DUG or the DIG. You do want to be paying attention to what is going on inside the energy sector, inside XLE. Now, 75.66 happened to be the 0.786 retracement. It got up to 75.47. You had some pretty decent volume inside this on Friday. If you take a look at the XLE, the energy sector, it actually took off. You did 23 million shares, so it's got some juice in there. I wouldn't enter the DUG until you start, and if we just take a look, let me see what it's doing right now this morning in the pre-market here, 1 minute before the market opens. So give me a moment here to type that in. Let's see what that is actually trading out at. See what the XLE is trading out at. So the XLE is trading out at 74.54. And if we take a look at the high, so it's trading inside March the 16th. What I can say is, are you looking for a real short-term trade, or are you looking for something longer?
Short term.
Short term. Okay. Well, do me a favor. Stay tuned. We'll continue to take a look at this when we get back. We'll see how the market's open. Then we'll go back to Lou in New Hampshire, 877-927-6648. Got the Dow futures off about 70 points right now. We'll be right back.
It's always better when we're together.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. You got the Dow trading down 75 points right now. S&P's off almost 9. Composite down 21. Small caps leading the charge on the way down. Almost a full percentage point down. 0.89, down $7.42. Apple trading off this morning right now, down $4. Cisco down 4 pennies. Google down 3.5. On the way up, leading the charge on the way up here. Dollar-wise, you've got Tiffany and Company. They're up $3.70, up 5%. You've got Focus Medical, FMCN. They're up $1.67. Netflix up 88 cents. Potash, POT, they're up $1.15. You've got Agrium Inc., AGU, they're up $1. Williams companies, they're up. WMB, they're up 79 cents. Mosaic up 97 cents on the way down. Apple leading the charge there, off $3.60. Google next, $3.41. Joy Global, JOY, they're off $3. Baidu down 3. Auto Live, ALV, they're off $2.80. You've got Cliffs Natural down $2.80. BHP Billiton down $2.30. Let's go back out to Lou in New Hampshire, who's taking a look at the DUG trade. So did you get in it when the market opened?
No, I didn't.
You didn't. Okay. So when I take a look at the DUG trade here, you know, here's what I'm taking a look at. I'm going to go ahead and pull this up on the screen. So you've got that trading up. It gapped up this morning. Well, I don't know if it's a true gap. Let me take a look at this here. No, it didn't gap up, but it did open up this morning, trading out right now at 21.57. And when I take a look at it, you did have a rejection of the swing point on the DUG, but the XLE is what concerns me the most. And on the DUG, you know, right now it looks like to me what you would most be getting out of this, unless you see some real volume picking up, is the swing point of March 6th. That's where it would be headed to. And the high out there is 22.78. The low is 22.34. So yeah, I'm going to pull up my position size calculator, because at 21.57 as the entry point, and I'll give you the numbers on it, and then you just simply, you know, make a decision. To me, the reward to risk is not in there. So if you got in right around the 21, I think it was 21.57, it was just trading out at 21.57. Now, normally what I do, Lou, is I, you know, take a look at what the average true range is, because we know that that's the daily volatility during the day. So when we use entering the price right now at 21.57, the average daily volatility on DUG, folks, is 0.54, 54 cents. And you want to understand that when you're trading, because, you know, what we can't control is what the markets are going to do, but you can control where you place your stops, and that's what it's all about at first, is being able to, you know, make sure that you understand what it is that you're risking out there. And when it comes to risking, you want to make sure that you've got a good stop in place. So your stop would have to be 54 cents below where it's trading, and I would say at a minimum at least 69 cents. 69 cents is the 1.272 expansion of 54 cents. That'd be multiplying 0.54 times 1.272. Normally I would use 1.618, but I would have done that work ahead of time. So I would say at a minimum you would use 1.272. Well, if 21.57 is where you were to enter, and I use the low side, 22.34, which is the low of that swing point for March 2nd, and I hit my calculate button. Now, I'm also suggesting that you would not risk 1%. you're looking at a reward to risk of only 1 to 1, 1.12 to 1. And I don't know if that's the type of reward to risk that you look for on your on your short-term trade. So at this stage, I just don't see it there. I'm actually looking to buy the energy sector on a pullback, not go short the energy sector, which is what you would be doing right here.
Exactly.
Okay, so it's just it's a good call and a good spot of a rejection of the swing point from yesterday inside the DUG. But I think it's more important to take a look at what's going on inside the XLE. And my concern on the XLE for you is that what it's doing right now, it's got some pretty decent resistance here. Just inside Friday's session, the low out there of 74.03. And what you really have to take a look at, Lou, is you really need to take a look at what's going on with ExxonMobil, because ExxonMobil represents somewhere around 30-some-odd%, I think, of the DUG. And ExxonMobil had some great volume come into it, on Friday's session. That's why, obviously, you saw the volume inside the XLE. And the volume that you're looking at, so ExxonMobil's got to break through the price point of 85.92. You're trading at 86.50 right now, and that had 30 million shares there. And that is some of the largest volume that ExxonMobil has seen. I know it was quad witching, and so that had something to do with the volume that's in there. But volume is volume, especially when you take a look at these candles. And it hasn't had that type of volume since the middle of December, so for 3 months. So until, right now, and that price moved higher inside the, that's why from my standpoint, my advice to you is look to play the energy sector to the long side after a pullback. Don't look to go short the energy sector.
Yeah, right. Okay.
Is that helpful?
That's very helpful.
Okay, perfect.
Yeah, thanks for that.
All righty. Thanks for the, hey, today's the first day of spring, right?
Absolutely.
Perfect.
Up here in New Hampshire.
Oh, what's the weather going to be like up in New Hampshire on the first day of spring?
Oh, it's great.
Are you guys going to the beach? Are you going to be in the 80s up there?
I'm going to the dentist.
The dentist?
Yeah.
That's not, do you like going to the dentist?
No, I don't.
Yeah. I don't know who, other than for a teeth cleaning, I don't know who likes to go. That's too bad. They get a bad rap, don't they?
Yeah.
Yeah. Well, have fun going to the dentist, and thanks for the call, and have a great day.
Thank you, Steve.
You bet. We got the Dow down 77, and that's right. Today is the first day of spring, folks. That's a great time to be able to grow. When we started the program, was talking about, when we think of cost, usually we're only taking a look at the cost of when we actually took some action, we actually got into something. And what ends up happening, if you go back and you measure your life, or you take, I know I go back to plenty of situations where I wish I had taken some action. Maybe it was an action with, a child to be able to teach them something, one of my children. Maybe it was an action with a previous employer or something. Maybe it was some action with some employees of mine. Maybe it was an action in the market, a pattern that set up and I didn't take that trade. Maybe it was, and you take a look at the cost of inaction. Just look at the folks that, haven't been in the market, got out of the market on the ride down. Maybe they got off of the elevator as it was making its lows towards March of 2009. I know plenty of people like that, absolutely afraid of the markets, yet not willing to accept that there are non-random patterns that work on a continuous basis. I just use as the best example. I get emails from all kinds of folks. Sometimes I get emails from people that like to just simply rip at you, which is always an amazing thing because, people see things however it is that they want to, and God bless you out there. And so, but you take a look, I started my newsletter service, folks, back in July 1st of 2011. So what's that, like 6, 7, 8, almost 9 months ago. Maybe it is 9 months ago. And at that stage, the S&P was trading out at 1341. Now, everybody can try my newsletter service for 30 days, free of charge. When I say free of charge, it's risk-free, and then I give you a 30-day unconditional money-back guarantee. So July 1st, the S&P is trading at 1341. Right now, today, you're trading at 1399. It's down 10 points. When I did this math this morning, it was when the close of yesterday was at 1409. So that means that the S&P, since I started my newsletter, was up 5%, a little bit less than 5%. Well, What I've done is 89 trades. Everything is documented. It's inside the newsletter. 89 trades since we started the newsletter. And, folks, we are up 36%. If we just simply didn't make another trade, then we could close out the year being up 36% versus 5% if you take a look at the S&P. That's a 720%, folks, difference between 5% and 30. You can take 5%, multiply it times 7.2. That's the difference that you're taking a look at. So when you talk about cost of inaction, oftentimes the cost of inaction, of not maybe jumping and taking some action, folks, those are the largest costs. When I take a look at, if I didn't jump through the window and go to Tom's Master Trader course when I did 6 years ago, and that's when I had no knowledge of I just knew that I needed to understand this. There was a reason I needed to know this. I wanted to understand how to better understand these markets, how to better understand where these markets might go to, and folks, and so I just simply jumped through that window. What I have found is jumping through those windows, whether it's starting businesses, when the universe provides you with those opportunities, you just need to jump, because what you will find, and you can go back time and time again, the cost of inaction is way more expensive than the actual cost of action, because once you're into something, you can always make some changes. And so I am going to be in Denver this Friday and Saturday doing the Master Trader Series course. I will be in Tampa on the 13th and 14th of April, and in Boston on the 27th and 28th. And folks, you've got a money-back guarantee. That means I take all the risk. That's a beautiful thing. You get all the benefit. You can sit through that class for 2 days, and if I haven't been able to teach you what you need to know, if I haven't been able to convince you, if you don't think that was worth it, whatever the reason is, folks, it's unconditional. You just simply can have your money back. No questions asked. So ExxonMobil, we were looking at ExxonMobil. That's trading out right now at 80.50. Again, there's some strength there in ExxonMobil. That's why I say going short the energy sector does not make sense. Let's go take a look at the financial sector, as long as we're talking sectors out there, because that has shown some pretty decent strength out there. As soon as I can find my spiders button, here we go. Here are the spiders button, and the spider in the XLF. We know we were taking a look at that Gartley cell that was formed. It completed on Thursday and Friday last week. Has some beautiful sacred geometry. Has a 0.786 retracement, a 1.618 expansion. You've got the XLF trading out at 1568 right now. So down just a bit. This, again, just like I was suggesting to Lou, I would not be looking to short the financial sector, folks. Instead, what I would be looking to do is buy the financial sector on a pullback. At least wait to see what kind of volume you've got, because what the XLF does have is it has volume at March 13th. Such an important, to take time, folks, go watch, if you haven't seen it, go watch the segment that I did during the Money Masters show. So that's on Channel 10 on Friday, and you can get it live, cook it up on your machine. I believe that because it's through a Windows Media Player or something, you can actually stop. You can take a look at how we took a look at the trade inside EXM, and it works the same way, folks. It works the same way in being able to be patient and wait for breakouts. In this case here, what you can see inside, if you were to go short the XLF, now you'd have to do it as a very short-term trade using the, I think it's the FAS is the short and FAZ is the long. I might have those reversed, because what you're going to run into is you're going to run into, in the case of the XLF, some real resistance. I would be your pilot. I would be putting on that turbulence sign as you came into the March 13th highs, the low there, or the high there being 1544. That is only 22 cents away from where the XLF is trading out right now. Let's go over and take a look at King Dollar, see what King Dollar is doing out here. King Dollar, and what you take a look at here on King Dollar, let's go take a look at the retracement that it did, and the retracement from the low going from the last bullish engulfing that was put out there, that was from the February 29 time frame. The low out there in King Dollar was 78.12. It did make a high coming into the March 15th area. The high up there was 81.16. Now, what we can see on the pullback here, just a little bit below the 0.382, maybe a 0.50 retracement level. But what I also look at is a swing point that was established on March 8th. So if we go take a look at that swing point low was 79.10 up to that high that was put in on March the 15th. And what you'll see is very close to a 0.786 retracement on that. I'll go ahead and get rid of this line here just so it'll clear it up just a little bit for you on TigerTV. Whoops. Deleted the wrong one. So we'll do that again for you. That was my little magic trick. So we're going from the low of March 8th all the way up to the high that was put in on March the 15th. And what you'll see is the 0.786 retracement was 79.54. Where King Dollar got down to in yesterday's trading session was 79.61. Not too bad there, folks. You're talking about 7 ticks away from where that 786 was. Now, what's going to be interesting here is King Dollar making an ABC up? That larger ABC up, folks, would take King Dollar. Let's see where it would take it. An ABC up would go from the low of February 29th. Our B point would be March 15th, and the C point would be yesterday. And if we go take a look at where that would take us to, 82 bucks, a little over 82.65. The swing point high out there that King Dollar is trying to eventually get up into is January 13th. The high out there is 82.04. So not unreasonable to think that that may be where King Dollar is going. But how do we know until we go see what the Queen is doing? We'd have to go over into currency land. We'd have to go take a look at the euro, see what, in fact, the euro is doing. The euro still has this 1-to-1 A to B equals C to D and a 1 to 1.272 A to B equals C to D still in place. That's going back here, folks, from February 24th high. That high out at 1.34850. The low was put in on the session on March the 7th, and then the C point was on March the 8th. Because that March 8th high, 1.3290, was not taken out, this A to B equals C to D is still in place. All that the euro has been doing has been working in a consolidation area from the high, if you will, in that 1.320 area down to the low of March 15th. We'll see where this is going to shake out. Let's go take a look at the other 2 currencies that are out there. We won't have enough time to do that. Let's go take a look at the Great British Pound. Let's put that on the daily chart here. This is the one that I think we want to be paying attention to, because what is going on over in England? And that's interesting. Okay, so that's off of its session lows today. What you're looking for is where does the Great British Pound close against the dollar? If it closes below 1.5836, that will be setting up a bearish engulfing during today's trading session. 877-927-6648. Dow's off 99. We'll be right back, folks.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It is better when we're together, folks. An attitude of gratitude. That's all that you need. You've got the Dow down 94, S&P's off 9.5, Composite off 24, and leading on the way down. Priceline now jumping into the charge again. I'm talking about dollar-wise, not percentage-wise. You've got the Priceline trading down $7.50. Apple just behind it, $5.21. Then you've got Google. Of course, Google and Apple, they're punching it out. Dollar-wise, we've got Cummins, Inc., Joy Globa, Sinocar, F5, Networks, Cliffs Natural, Auto Live, Caterpillar, Baidu, Pioneer Natural, Wynn Resorts, BHP, Walter Energy, Apache, and those are on the way down. On the way up, you got Tiffany, Goldman Sachs, Williams Company, CF Industry Holdings, Liquidity Service, LQDT, they're up a buck. Everything else is pretty much just under $1 on the way up. And if we do take a look at, let's go look at the signals out here in a couple of the ETFs for the indexes. So what I do have up on the screen is the Qs, a 5-minute chart. A lot to be learned here by taking a look at this chart because they have been the leader. Let me just, geez Louise, get this up here on my screen. Okay, so we're taking a look at the Qs, and when the Qs did open up this morning, it did gap down. Now you take a look at the volume on the gap down. It was 1.1 million shares during the first 5 minutes. The next 1.3 million shares. Then it did 610,000 shares. And then at the low of the trading session so far, 429,000 shares. Now, that 429,000 shares, folks, also made a hammer candle. Hammer candle on the way down. That is good as it was coming into a swing point. The swing point that I'm looking at is going into the 3:25 p.m. session on March the 16th. That did 389,000 shares. So you tested that swing point, 389, versus what you did this morning of 429, still slightly higher volume. But now you still have to step back a little bit further. And by stepping back further, what I'm taking a look at is the high volume bar that happens to be out here. Not a swing point, but still while you want to take a look at volume, see where volume is at. You had a high volume bar that came in at 4 o'clock, makes sense, 2.9 million shares. That 2.9 million shares is also the same price point area, meaning the high was 66.52, low of 66.47, and that is exactly, when we take a look at that hammer candle, that was at 66.46. So you also have, and again, if you take a look at that volume that is out there, that was 2.9 million shares going into the volume as was coming down this morning at 429,000 shares. Now, This is important. Again, just a 5-minute, and if you're going to trade the 5-minute, you're going to trade a short term, you want to stay inside this chart pattern. And I do teach a technique on how to trade these hammer candles. My clients have it; they've got access to it all the time. It was done during about a month ago, if you will. And the low of that, folks, what you don't want to see if you were trading this intraday and you're trying to trade it going long, you do not want to see it close below 66.46. When you do trade below a hammer candle, that says that you will seek out lower prices. So that's on the cues. And it's important to take a look at strength as well as weakness. We have just about 20 seconds, so let's go take a look at the weakness out there. That would be in the IWM. See what the IWM is doing on its 5-minute session. IWM testing its swing point low that was down here at 940 on March 19th. That did 1.8 million shares. When you came into it this morning, you did 1.9 million shares. Kind of a draw, if you will. Look for the low of that to also be tested, just trading sideways right now. Folks, time just absolutely flies, but the good news is, flying in here in just a minute is Tom O'Brien. We'll be doing the Money Master Show. Stay tuned for that, because after that, we go out to Kate Stalter in New Mexico, then Victor Jones in Chicago, Ken Shreve from 3 to 4. Thanks so much for being here, folks. Have a great day, and make sure you live with an attitude of gratitude. Take care, folks.
Well, it's all